Hi, this is Roger Balser from Balser Wealth Management. Welcome to our 2-Minute Tuesday for October 14th of 2014. Our topic this week will be, when will the Fed raise interest rates? Recently, one of the most common questions I'm being asked is, when will the Fed raise interest rates? Well, I think Janet Yellen has a big problem, and it will likely impact you and the banking system. Yellen is the current Fed chairman. She knows the U.S. economy is at the point where she should move interest rates from zero. The U.S. has had zero interest rates for years now. We're starting to see real signs of economic growth in the economy. The Fed has been able to avoid a replay of the Great Depression. When the Fed raises interest rates, that impacts mortgage loans, car loans, money borrowing for small business owners, and lots of other financial related areas. The Fed will clearly have an impact on the stock market. When the U.S. economy plunged into the Great Depression in late 1929, the economy stayed mired in the muck until the Fed started flooding the banking system with cash in 1934. Like today, getting the banking system back on solid footing was a primary concern for the Federal Reserve. The economy finally started seeing solid signs of growth in 1936 and into 1937. At that point, the Fed raised rates quickly. When the Fed raised rates in 1937, they were doing the opposite of adding liquidity to the banking system. They were contracting the banking system, and almost immediately the U.S. economy slipped into a serious plunge. Some will say that only gearing up for World War II got the economy out of a severe negative downward spiral. So Janet Yellen has a big problem. I suspect the Fed will be very hesitant, in fact, downright slow to act this time. The Fed won't raise rates quickly because they want to avoid another 1937. I expect the Fed will announce quantitative easing is over, but the Fed accommodation period will continue indefinitely. The funny thing is, if you pay attention, Janet Yellen has already told us when she will raise interest rates. In a speech from 2009, the link is here on this slide, Janet Yellen said, and I quote, "If anything is, I'm more concerned that we will be tempted to tighten policy too soon, thereby aborting recovery." That's what happened in 1936 when, following 2 years of robust recovery, the Fed tightened policy by raising short-term interest rates because it was worried about large quantities of excess reserves in the banking system. The result? In 1937, the economy plunged back into a deep recession. Japan, too, learned that hard lesson in the 1990s, when both monetary and fiscal policies were tightened in the mistaken belief that the economy was rebounding. These episodes teach us a valuable lesson that we should heed in the present situation. Let us not be another 1937, but a time when policymakers have the wisdom and patience to nurse the economy back to health, end quote. So when will the Fed raise interest rates? Rates may rise off zero at some point in the future, but runaway interest rate hikes, I'll bet the under on that one.